Uber, meanwhile, announcing major layoffs this morning and the foregoing of pay by CEO Dara Khosrowshahi just almost a week after Lyft made a similar move. Deirdre Bosa has the latest. Deirdre?
Hey, John, that's right. Uber is laying off 3,700 employees, and that accounts for about 14% of its total workforce. In a filing, the company says that will likely result in $20 million in severance and benefit costs. But this wasn't unexpected, guys. Ride-sharing bookings, we know that they have fallen off a cliff. Both Uber and Lyft have withdrawn their guidance. And this business model, even in the most robust times, it burns through billions of dollars annually. Now, as John mentioned, this does come after a number of other layoffs in the sharing economy. He mentioned Lyft. Remember, the sharing economy, this is a market that's getting hit particularly hard in the COVID crisis. Lyft has laid off about 17% of its workforce. There's also scooter startup Lime has laid off about 13% of its staff. Yesterday, of course, Airbnb announcing cuts of about 25% of its workforce. And WeWork, of course, whose troubles started long before coronavirus, is expected to make more job cuts in the coming months. Now, the filing today says that Uber CEO Dara Khosrowshahi is forgoing his 2020 base salary. In an email to staff today, he says that days like this are brutal, but it reflects the reality of ride trips volumes being down significantly. Now, Lyft reports today after the bell. Uber reports tomorrow. And Uber's results could look worse because its footprint is far more international and therefore would have been feeling the COVID fallout for longer. What will be interesting to watch is what the companies say about the last few weeks in particular. Uber hinted about a month ago that it was seeing a recovery in some of its markets. And also it'll be interesting to see what the companies say about those profitability targets that came before the crisis and whether the pandemic totally throws those off track. Back to you.
Yeah, Deirdre, definitely some key numbers that we're going to be and insights we're going to be watching for. It's interesting at a time where everyone is so focused on the unemployment data, jobless claims, ADP today, jobs report for April on Friday. It seems like the share economy is only just starting to roll out these waves of mass layoffs right now. Is the sense out there that this is sort of just the tip of the iceberg the longer this pandemic stretches out for within the share economy?
Yeah, I think it does. And remember, we're talking about corporate employees, right? We're not talking about Uber drivers and Instacart workers that are seeing a surge, some which are seeing a surge in demand. And of course, drivers who are seeing the opposite, demand dry up. But these are corporate employees. And I think a lot of these companies, particularly when you look at Uber and Airbnb, they have become quite ambitious over the years. You think that this two-sided marketplace, which is asset light, would have to do less of this. And I've heard from a number of people, they're surprised that Uber and Airbnb had this many employees to begin with. But remember, this is all supporting these platforms. That's what they want to be, transportation, travel platforms. So you bring more and more employees at a pretty high wages relatively, right? These are tech companies at the end of the day. So now they're having to scale back. And I think you're right, Morgan. This could just be the tip of the iceberg. I think with Uber in particular, you could see more cuts on the way.